Yeah, welcome to the February edition of Strategy Capital Market. I am Vishal Periwal, Cement and Construction Sector Analyst and Head Research Institutional. Now, coming to the global market performance, geopolitical jitters was visible across the globe with the S&P down by around 3% in the month of February. Now, from market point of view, it's challenging to develop a one outcome to the Russian and Ukraine crisis, and thus market price action will reflect development which is developing in nature between Russia and US allies. Now, in terms of market strategy, when the market is volatile, we understand it's important to maintain a long-term perspective, and historically it has paid off well. As once geopolitical tension subsides, then EPS and fundamental will drive the price action in the stocks. Now, coming to India performance, in February 22, Indian equity market was down 3%, which is similar to what S&P was down. But within the mid and small cap, we have seen a major drawdown, they were down by around 7 to 11%. Sector-wise, if you look at, metal was the only gainers, and in terms of maximum weakness, sector-wise, we have seen PSU Bank, Auto Index, they were down sharply. However, economic indicators, if you look at GST collection, they were pretty good at a level of 1.3 trillion, so that continuity or momentum is being maintained. Now, in terms of inflation data, it was on the higher range of RBI threshold, which is at 6%, but RBI governor has said, inflation is higher because of the base effect, and it shouldn't surprise or create alarm. Yeah. Coming to our market view, now post Q3 result, sector-wise deviation in EPS upgrade and downgrade is seen, with upgrade seen in IT sector, financials, oil and gas, metal, and downgrade is seen in consumer staples, cement and auto. But Nifty consensus EPS is largely same for FY22 to 24. Now post Q3, there has been a further uptick in commodity prices, and the same we are expecting even in the Q4. These companies will see an upgrade and downgrade in similar to what they have been in the Q3. And with the recent price weakness of Nifty 50 valuation, the market valuation of Nifty is moving closer to the last historical average of 16 times, which basically we are saying the valuation is benign now, what it was at the start of the year. Now, in the last 1 week, we have seen commodity consumer companies like paint, staples, cement and auto, they have seen a maximum drawdown. But in some of the sectors like cement, the valuation on a price to book basis is below averages, which basically we are saying it's getting attractive as every day is passing by. Now, in terms of our stock recommendation, where we find EPS growth is there or where the valuation support is there, we find in large cap a couple of the picks which are there: Infosys, ICICI Bank, Maruti Suzuki, Avenue Supermart, Ultratech Cement and SAIL. In terms of small and mid cap, we have a preference for Sonacom, KNR Construction, Manappuram Finance, Bata, Chalet Hotel and Safari. Now with this, I'll conclude, and thanks for watching February edition of Strategy Capital Market.